trading journal helps you track trades and analyze your performance. Journals can be complex or simple. The cosmetics don't matter as long as you gather important data. To demonstrate what kind of information should be recorded, I'll use a sample trading journal. Let me show you where to find the link. Click the word here for the same trade journal. Let's take a minute to orient ourselves before jumping in. Right now we're looking at the Summary tab. At the top there's a portfolio summary, which includes your account value, portfolio heat, and profit and loss. Below in the ratio section, there's a summary of each different strategy you're using. Along the bottom of the spreadsheet, you'll see additional tabs that correspond with different strategies. We're only going to look at the stock tab labeled STK. Again, at the top of the page, there's the same portfolio summary from the first page. This helps you think about how individual strategies fit into your total portfolio. The rest of the page is your stocks trading journal. Let's talk about each column, what it is, and why it's important. To do this, I'll enter a fictional trade in the journal. For this example, we'll use Amazon. I'll type AMZN in the symbol field and select Consumer Discretionary from the sector drop-down list. It's helpful to include the sector because it allows you to compare trades within different sectors and track your diversification. Now let's say we purchased 150 shares. I'll type 150 into the quantity column. This number is important for calculating things like portfolio heat and risk. Let's say we entered the trade on June 4th, 2015. I'll type 6415 for the entry date. Let's say we bought at $431.09. I'll type that as my entry price. Next, I'll enter the commission in the COM column. I'll assume a commission of $6.95. You can see that the journal automatically calculated my total trade investment and risk. Note that the risk assumes the possibility that we could lose the entire position because we haven't entered a stop level. So let's do that now. I'll enter the stop at $414.56. Look what happened to the risk when we added a stop level. It dropped from $64,670.45 to $2,486.45. If you weren't already convinced, that's a pretty compelling reason to use stops. Finally, I'll add a few notes about the trade. Notes are an important part of your trading journal. You can use them to document any unique or relevant considerations that might impact the outcome of your trade. Let's say we made this trade with a bullish market posture, but in a sideways industry. It would be helpful to compare this trade to one in a bullish industry. Good notes will help us remember these considerations. Here, I'll type bullish market and sideways industry in the notes field to help us remember. That's really all you need to document when you initially place a trade. Then you can update your journal as you monitor your positions and when you close the trade. Let me show you how. During weekly routines, we can look at current stock prices for all of our open trades. Let's say we find that Amazon dropped to $427.05. I'll type that in the current stock price field. Based on the current price, the profit and loss column automatically updates for the trade. While this gives us a quick view of how the trade is doing, remember that these losses and profits aren't actual losses and profits until the trade is closed. For this reason, be careful about getting too caught up in this information, especially if you're a long-term investor. Now let's say we exit this trade a year later on June 4th, 2016. I'll type that as the exit date. Let's say we sold at $490. I'll type that as our exit price. The trade is now marked as closed. However, we must account for the exit commission of $6.95 before the final profit and loss is automatically calculated. After doing so, we can see that this trade had a profit of $8,822.60, or 13.64%. We've looked at just one example of a trading journal. Remember, you can create your own to fit your needs and personality.